Hello, everybody, and thank you for joining me today. It's Allan Barry Laboucan with the Rocks and Stocks News Show. And I got a really interesting story for you guys today. When Norsemont 1.0 was one of my big successful picks back in the 2001 to 2011 bull market. And the what happened was I picked them early and they ended up getting taken over, and now they're doing Norsemont 2.0. So I'm happy to have Marc Levy on to talk about the new venture. How you doing, Mark?
I'm doing really well, and it's really good to reconnect with you and happy to tell our story with you again.
Well, your son actually reached out to me recently and he said, "Have you been following Norsemont?" And I said, "Oh man, that's a great reminder of the past." Because, I think you guys ended up getting bought out for like a $500 million many years ago. And so I said, "Oh man, I got to talk to your father." And so I'm really glad your son reached out to me and I can learn about the Norsemont 2.0 story, Mark.
Yes, no, I appreciate him reconnecting us. It's nice to meet people that helped us succeed in the past, and look forward to reconnecting and getting you acquainted with our company.
Well, that was certainly a different time. I started my reports in 2005. I actually started in the business as a consultant in 1993. And I kind of felt like, I thought a lot of new people would come into the business, but I looked at who was writing about the industry, and I didn't really see a lot of guys that were had spent a lot of time learning about the rocks, and it was more about the stocks. And so that's why I started my report. And during that 2001 to 2011 bull market, I picked 29 companies and it was email back then. And I think 20 of them either were taken over or became mining companies. And you're in that Hall of Fame, Mark. So thanks for doing that in the past.
Thank you. I appreciate it. And obviously, you've got an amazing track record and a good credibility in the market. You're a very respectable guy. And as you know from the past, I always like to work with the best people out there. So really appreciate us reconnecting and me having an opportunity to tell you a little bit about our company and what we're up to.
Well, Norsemont 1.0 turned out really good. Why don't you tell us about Norsemont 2.0, Mark?
Absolutely. Yes, absolutely. Norsemont 1.0 turned out really well. And Norsemont 2.0, I felt we needed exposure for our family and my investors to gold. And in 2019, I was looking for gold assets. And typically, I do deals with majors or mid tiers to take an asset and advance it. I like assets that have, advanced stage type of situations. And we got lucky enough to meet the lawyers behind COPEC, which is the largest conglomerate in Chile. They owned a couple of gold mines they were looking to get rid of because they're investing in copper in Peru, my old stomping grounds. And it was just perfect timing. The price of
And
gold
your
went up.
medal, that was
Right?
copper. Norsemont
Exactly.
1 was copper.
Yeah, and I'm a copper guy. I'm still a copper guy. I love copper, but I love gold too now because it's a smart place to be.
Yeah.
And we ended up acquiring Chocolimpe. So we own 100% of Chocolimpe. It's a project in northern Chile. It was the third largest producer in Chile back in the late 80s, early 90s. Shell, the oil and gas company, owned it. A very famous person and an amazing person. David Lang put it in production
Oh, wow.
for Shell back then, and it happens to be he's also an advisor to our company because I guess this is his baby. And he had a lot of information on the project, which was helpful and data. And so, being a former producer, we've inherited a lot of infrastructure, power, roads, backup generators, We have water. We have a 3,000 ton a day mill. We have an ADR effluent plant. We have leach pads. We have a 35-man camp, which we had to refurbish. So really, we've inherited, according to David, I remember him and I doing a interview a few years ago. It's been a while. And he said, "Oh, we've inherited 150 to 175 million of infrastructure alone."
Wow.
So that's kind of a nice bonus for us because that will reduce the capex when we go into a production scenario.
Now, Mark, when was it in production? And I'm assuming that it went out of production because of low gold prices.
Exactly that.
Okay.
It went out of production in the early 90s because obviously gold dipped to $300 and nothing was feasible anymore. And it kind of got put onto care and maintenance and then actually Rio Tinto, my good old friends at Rio Tinto that I've done business with in the past, optioned the project looking for a large copper porphyry and they drilled 3 holes and they missed. So they're smart guys and we've got our own thesis we can talk about a little later, but this project had a lot of drilling on it. We have 140,000 meters drilled and 1,710 drill holes. So we've
So
got
if they were looking for a copper porphyry, you
yeah,
guys, the mine must have been an epithermal vein system above the copper porphyry.
yes, it's the highest sulfidation epithermal system at surface.
Wow.
A lot of gold mineralization, very large target. We
Excellent.
delineated. We put our MRE out a little while ago in April, where we generated a total of 2.74 million ounces of measured and indicated. Indicated and inferred resource. 80% of that is indicated and 20% inferred. And so we've got initial gold resource as a starter, and that resource was generated in the first 70 meters of the system,
Oh,
which, as you know, typically these systems go down 300 meters. We've tested it with drilling. We've proven our thesis that it does go down 300 meters. And so we are targeting a larger resource of about 7.5 to 9 million ounces
wow.
based on the gold, silver,
Mark,
equivalent.
in that MRE, do you know that what the cutoff grade was and the average grade?
Yeah, so the average grade is about zero point 0.8 grams per ton in the indicated and a zero point 0.7 grams in the inferred because they used a lower cutoff grade, which I should know by heart, but I don't. I believe it might be 0.28 or something,
Yeah, I think
because the
that's
price of gold ran up while we were doing it. And so that's why we got a bit more volume. And we're going to be putting out a table, but I think if you bring up the cutoff grade and you want to get that 1 gram equivalent, we'd be somewhere around 2.5 million ounces. So
wow.
for those that are very keen on grade and it's not about the mineralogy, then that would be kind of where that number may lie.
Well,
Um,
I'm of the mindset that I like to look at the cutoff grade because that gives you an indication of your cost of producing it, a general rule of thumb. And the average grade, I like to see a gap between those two. And it doesn't really matter to me about the grade versus it's the margin that gets me excited because that's where you get your internal rate of return. That's good. And so that's what I care about, Mark.
Yeah, no, and obviously that's important. And we have a lot of high grade zones. We want to upgrade the resource and try and increase the overall grade, which we think we can.
Yep.
One of the beauties of this project and this company that you can appreciate is it's a former producer. Um, we have 210,000 ounces sitting in our stockpiles ready to be processed
Oh,
on
wow.
leach pads, and we've drilled those to confirm that to 43-101 standards. So we've got a back of the envelope scoping study done by Kappas Cassidy. Dan Kappas, a very famous guy out of
Yep.
Reno. They're the most bankable guys on the West Coast, and
Yep.
they've been with the project with Shell, so that's why it was good to keep continuity, and they've been helping us. And so we've got a back of the envelope of $65 million of an earth moving infrastructure to move the 11 stockpiles onto the leach pads and leach out this 210,000 ounces of gold. And at these prices, we would generate about 525 million of profits just on that little amount of gold. And we still have another 350,000 ounces 43101 of oxides that we can process in our 3,000 ton a day mill and keep the cash flow going. We've also done some surface map sampling, and we've found a whole zone of 10, 5, 2 gram per ton material in oxides. And so we're
Wow.
targeting to delineate another 1,000,000 ounces of oxide material. So we can become a 1.5 million ounce oxide producer really quickly here in a very short period of time, all the while developing a larger resource to bring into a much larger plant and either obviously sell the company or put it into production. And then, as you alluded to, me with my background in copper and being more of a copper expert, I was like, what drove all this mineralization? Rio Tinto's the smart guys, is the blue sky of a copper porphyry. And so we did a drill hole. One of our last drill holes we were looking for gold. We drilled 300 meters down into the main Choke pit area. And at the bottom of the pit, we encountered 3, 4, 5 grams per ton in a 6, 9, and 6 meter interval, and 50 to 100 grams of silver, and bingo, 1.75 and 1% copper. And
Whoa.
so, and people say, why did you stop drilling? Well, we didn't know, and we weren't going down to, for copper, we thought we'd be going down to 600, 700 meters. And we believe we hit the cupola, the top of a copper porphyry. And on
Wow.
our team, we have Dr. Diakov, who's a copper expert. He helped discover Oyo Tolgoi for Friedland. And
Yeah.
he was on the call. He's like, Mark, stop saying we might. We have a copper porphyry. We know the grade is amazing. We don't know the size, but we are an elephant country. So our blue sky is that copper porphyry, but really what we have
Well,
of real
actually,
substance is gold and silver that everybody loves. So we have a really unique, robust situation where we can create a lot of upside. And I want to sell $1 billion company, Allan. I failed to sell Norsemont 1.0 for $1 billion, and we were very close. I can talk about that openly now because it's gone. In
well,
2008, we thought we were going to get $1 billion exit, and then of course the markets came off. 2009, keep it going. 2011, we had a $500 million, $520 million exit to Hud Bay. They put it in production. My baby's in production and making them a lot of money. I'm a shareholder of Hud Bay. Everything's great. We definitely want to build this out, and we see, a potential $1 billion exit. My family, myself, my son, as you know, my wife, we've put 9 million of our money, and we just broke even this month on our investment. So we've been underwater for a little bit.
yeah.
And so, we are aligned with our shareholders. We put money into every funding that happens. We did raise a lot of money at much higher prices. So our family had to average down in some of my strategic shareholders as well. But yeah, we've got a really good shareholder base. It's a very strong
I'm
asset.
gonna I'm gonna try to convince you of two things, Mark.
Uh-oh.
All right. So I live in Mexico, and it's 10% of the silver that's ever been produced worldwide in all of mankind history is comes from epithermal veins. So I know a lot about epithermal veins. And one of the things that I think that I might add another piece of blue sky for you. The in the model of an epithermal vein system, the porphyry is the engine or the heat
Yeah.
source that causes all that. And you've got the top of the model, which is in your oxides. But in between the oxides and the sulf and the or the porphyry is the boiling zone of an epithermal vein system. And that is what all of the silver production, well, let's say 90% of the silver, there is a fair amount of oxide mining too, but the guts of it is always in the boiling zone of an epithermal vein system. So you've kind of tagged the source and you've kind of tagged the top of the system, but in between there, you could have some very juicy stuff.
And you are correct, and that's the thesis within our team, where we say, a lot of people think, hey, Mark, you can't say you're targeting 7.5 or 9 million ounces. Yeah, publicly, that's what I'm saying, and the math makes sense. And I think if anybody with a really strong geological background looks at this, they might say I'm wrong and they might have a better number than me. But, we want to set something realistic. And the initial funny thing, the original resource when we acquired this, why we did is it had a 5 million ounce resource done by AMIC Foster Wheeler, but it was done in 2017 and the rules changed in 2019 for 43-101 for the better, to not count non-economic ounces. Although, as you know, in a market where you see copper deals being financed at 0.3, which is unheard of to me, gold deals the same situation. I mean, with gold over 3,000 here and heading maybe towards 4,000 next year, which is my belief, maybe those non-economic ounces become economic soon with these prices, because obviously putting mines into production, well, guys talk about $500 to $800 on leaching, and then 1,000 to 1,500 cost base for sulfide. So the cost of mining is definitely a lot less than the product cost. So the product values are going up and the demand's going up. So we're in a really interesting environment here. And I think we're at the beginning of a little bit of a bull cycle here where the earlier investors are waking up.
I don't think you're out of line with that arm waving because, Mark, here's another thing that's interesting about epithermal veins. What you have in the oxides is an indicator of what you have below that in the boiling zone. But another exciting part of epithermal veins is that they come in clusters. Because those porphyries are so powerful, you tend to have, you can have 20, 30, 40 veins in a cluster. So you got a lot of technical reasons to talk about multi-million ounces of gold. And then the guts of the engine of the whole system is the porphyry. And if you've got lots of oxides at the surface, it tends to be a big, powerful system that caused that. So you got me excited, Mark.
I should, seeing that you're getting technical with us, and I don't want to confuse investors, but as you may know, and you do know, that sometimes porphyries occur in a cluster of porphyries.
Exactly.
So what I don't mention is in the Viscaccia northern part of our zone project, we've got a drill hole down to 350 meters, and we discovered gold porphyry between 325, 350 meters. And we've seen some protrusion to the surface of gold porphyry. So we have a gold porphyry in the northeastern part of the project, and we believe we have our copper porphyry in the southwestern part. So if you
Oh
want
my
to talk
gosh.
about engines and mineralization, and then you'd maybe get maybe you would think, hey, wait a second, some of these numbers out there. There's a report that was done for COPEC a long time ago about the district, and the numbers that they quote for what the potential for that district is unfathomable. But me telling you now that, by the way, we have two porphyries and maybe there's another one, who knows?
They
That's
tend to come in clusters as well.
Yeah, so it's a very unique situation geologically and very powerful situation geologically.
How
So yeah,
much ground do you have on the how big is the property?
it's 25 square kilometers,
Wow.
and the heart of it is 5 square kilometers. And we even we're redoing our deck and our website. So I apologize to our investors. It's not the prettiest, but we're now incorporating. There's a zone called PROA zone. It's about 3 kilometers away from the heart, and it's a whole oxide zone. So we don't even talk about that, where there's, I think, a 50-meter drill hole of a gram and a half material. Pretty nice. And so we're going to
These
reincorporate
days
that into our deck.
in an oxide, that's high grade in an oxide
Yes,
deposit.
exactly.
Yeah.
1 gram is holy grail in an oxide, right?
Yeah.
That's
Even
moneymaker.
three
Half
quarters
of it.
of a gram is
Well, and remember, we have the infrastructure already there too, right? So
exactly.
when you look at CapEx and IRR, it's like I don't have to spend a couple $100 million putting part of our infrastructure, and I just got to build a new plant, and I probably can do that with the cash flow from our oxides. So I'll never have to go to markets. Like, that's part of the plan. Is imagine a company that says, "Well, we just made 400 million over the last 3, 4 years, and now we're going to build our plant, and where are you getting the money?" Oh, let me just check. My pocket has more than enough to cover it. Wow, isn't that funny?
Yeah,
So we're in a very
your
good situation.
stockpile can get you. Your
Oh,
stockpile alone can get you to being an oxide miner, and your oxides can pay, and actually the stockpile can also pay
pays for
for the
everything.
depth exploration.
Oh yeah, it's insane.
Wow.
Yeah,
So,
no, it's a very unique situation. And the good news in Chile, if I can plug Chile in here, because now I think they're becoming a
well,
favorite
before you do
country.
that,
Okay.
I said I had two things I want to try to
Ah,
convince you of. The other thing is, okay, so when we saw all those takeovers in the 2001 to 2011 bull market, they basically have taken away something that was important in the past. There is basically huge companies and very small companies. And in between, there's not a lot of mid tiers and junior miners like when I first got into the business. And in fact, that's how a lot of majors work their way up to becoming majors.
yeah,
But now in that window, there's really majors, they're giants now. And then there's not a lot of mid tiers or juniors. Okay. And so when you, I think that there's an opportunity for a junior miner to become that next major by building. I know you did the exit of being bought out in the past, Mark, but I
yeah.
think you've got the foundation there to grow yourself from a junior miner into a mid-tier or maybe even and then depending on the strategy of what you do with your acquisitions there, you could become even bigger than that. So, what I'm trying to convince you of, Mark, is maybe you want to look at it as becoming a miner, a junior miner that grows into a mid-tier miner, and who knows what you grow into beyond that, because you have an amazing foundation with what's on the property, and you were just about to start talking about, and we'll talk about that, the things that are happening in Chile with them opening their arms to becoming, to opening their arms to mining. What are your thoughts on that, Mark?
Yeah, no, that's a very interesting thing you brought up because with Norsemont 1.0, that was part of my vision, as you may know, and I wanted to roll up other copper deposits and become the largest roll up of copper assets. And then if someone needs an asset, they got to come to us or we put it into production. And so obviously shareholders love cash flow. The beauty with Norsemont is the capex to get to cash flow is so low that it can be very easily done with a stream debt. We don't need to dilute. Even if we had to raise 10, 20 million of equity and raise 40 million of debt, we're cash flowing and the return is so
You'd pay it back in 9 months, six
yeah,
months.
it's insane. It's less than a year payback. I got to be conservative, but you know the numbers better than me even. It's insane the payback, how fast it is. And then we can forward sell that gold even and put the bigger asset into production if we really want to be cute and then do a roll-up strategy, like you said, combine with like-minded companies and become a mid-tier producer. And obviously if you really want to get the best value, going around and waving your arms that you're going to be bought out is not a good strategy. Waving your arms that we're going to production, we're going to go to cash flow, we're going to be independent, we don't need anybody. You're going to get the best value for your shareholders. So, for
The
me,
problem with companies trying to make that pitch, Mark, is that they're at 500 million to a billion to, so it's a bit of bullshit poker that is hard for them to sell because people look and say, well, how are you going to raise $1 billion to execute?
yeah,
Well, here you're talking about 50 million to
yeah,
execute.
nothing,
So,
not even.
right.
Yeah. Because obviously typically when you're going to production the rule of thumb is 70-30, 60-40 equity to debt So like, it really is not a lot of money. And then even for a major to look at us and say, wait a second, we can cash flow for a couple of years on this. It'll pay for the bigger plant and put the, 9 million dream into production. And that's one of the reasons why we want to get our resource up to 5 million ounces and get noticed by the big cap mining companies or mid-tier mining cap companies. But definitely look, for us, in the end, we work for our shareholders. They determine what we do. And if we want an exit, it's because the shareholders want it. We're here to create as much value as humanly possible. I think we have a short 5 year runway to see a lot of advancing of assets for the whole industry and getting into a position where you're in production or you're being acquired, or else you may be subject to a downturn, over the next 10 years in the market. So you either got to get to production and sustainability or you get an exit. And we like to create exits. We have, Bill Katsouris is an advisor on our team and used to be a board member, and he's an investor. He's done 25 billion in M&A with Endeavor. And we also have David Lang, who put in production, has been 25 billion in M&A. And I've sold close to $1 billion myself of mining companies. I've done a few of these. And so, yes, we could create the exit, but obviously getting the cash flow is the holy grail of, now you can tell anybody to bugger off because you're sustainable and you've got longevity now. So, I like that optionality of our company and our situation.
Now, I interrupted you and you'd started to talk about some wonderful things that are happening with Chile. I've done very well in Chile. I probably picked a handful of companies and they all got taken over or became miners. So tell us a little bit about what you were starting to talk about regarding Chile.
Sure. So in Chile, we have a president that, for the people, had to say certain things against mining, and then he went to the Senate, and everything got denied, and the Senate basically said, "Oh yeah, we'll take a raise because the mining industry pays us." So it's been a very good environment. I've been in Chile for 5 years. Chileans have now turned to wanting to invest. So the environment's been very good in Chile, very positive in Chile. The government with us and the local community with us have been more than patient, more than amazing, and very supportive. We're in a unique area. So I think we've been doing amazing in Chile, and I don't see any roadblocks. But last week, some really good news came out where the Chilean government says we want to shorten the time frame for permitting by 70%. And for us, that's obviously very valuable. Smarter money always looks at when can we get this into production and get cash flow. Our dumps, we could probably put in production within 2 years. And I'm using the old rules, not the new rules. So now that the rules have changed, hopefully that's faster. Obviously, on a larger scale deposit, that takes a few more years. So the fact that they're now reducing those wait times for getting access to the energy, the power, and all that wonderful water is an amazing thing for us that happened just at the beginning of July here, which really changed the game for Chile. And I think South America as a whole, if I can say this, Argentina's turned around unbelievably. It's an incredible thing that's happened. I'm really happy for Argentinians and for people mining out there because I've had some investments in projects. It's an amazing place. And I think look at Chile now is turning around big time, even though they've, I think, been on the right track. And I think others, South American countries are going to follow. I think South America is going to be the golden child of our mining run
Well,
in the next 10 years.
you're talking about a trend there that, I've noticed being in Mexico, is that, okay, when AMLO was making a lot of noise, the other countries in Latin America were sort of, oh, AMLO's the guy, we got to follow AMLO. But now that Milei is making all the noise, that whole region of Argentina, Peru, and Chile, and Brazil and other countries are starting to, oh, Milei is the model. And he has done an amazing job. The growth of the economy and the decrease in inflation is like a phenomenal thing. And so I
Yeah.
think that trend, that Malay magical trend, is affecting other countries, and it will be a long trend because Chile and Peru know how important mining is to their economy, and the same with Argentina. So I like what you're saying about the gold, a golden triangle down there.
I wholeheartedly agree with you. And obviously, I love Peru because that was my biggest exit. And I think Peru is even turning around as well. So, like you said, I think it's set the stage for what to do. And let's call it a spade a spade. A lot of these economies, can't afford to print money like other countries in the Western world to deal with their debts. So they got to find cash flow, and the price of commodities are doing well. And they own a lot of commodities in their grounds. Every different country has their thing. So I really like Argentina lit a fire, I think, in South America that needed to be lit.
Yep.
And I think Chile has always been really, really good. I mean, politically, they've been amazing with us. They've been very supportive of us before all this. And I think, yeah, it's going to be a fun time in South America.
It's
I
only
think
going to
we can
get
see
better.
it. Yeah,
So
no, good.
I'm working on convincing you about three blue skies on your property from a technical perspective, and one on a strategic perspective to be a miner. Go build a mine, Mark. But here's the other one. You brought up timelines and you said something about 5 years. And I kind of understand where that comes from, but I think that there's something happening in gold that people don't really realize how important and how long lasting it's going to be. I believe that the death spiral of debt in the United States has the straw that breaks the camel's back is the cost of servicing that debt. And that's what makes it a death spiral of debt. And I don't just think that that is a America-centric problem. I think the whole debt and fiat currency system is broken. And in order to fix it, they're going to have to go back on a gold standard. All right. Now, I don't know if it will be like it was in the 1960s when gold was like 50, 60, 70% of the reserves of central bankers. But I definitely believe that they have to, in a significant way, back up their debt and their fiat currency system with more gold. So, what's happened in 2024 is the reserves of gold surpassed the euro, right? And so that's got some press over the last 6 months or so. But what people have not paid attention to is the US dollar has gone from 60% to less than 50%. So gold is making inroads against the world reserve currency. And what I'm getting at here, Mark, is that as the world goes back to a gold standard where gold is important as a reserve currency as well as for international trade, I think that process, it took 50 years to get here, and it could take 50 years to get to the next gold standard. So this is another reason that I think that your window of 5 years could be much, much longer. And that's why another reason why I'd like to see you become a miner, because I see a long road and a need to have more junior gold miners and mid tiers.
Look, I fully agree with you. And funny enough, I'm at the Rick Rule Symposium, and there's a very famous speaker. And I was sitting down with some very, very powerful guys like Rob McEwen and another lady, and listening. And they talk about the amount of buying that the central banks are doing, and even the US is doing, of gold is insane and unprecedented. And even on the balance sheet of the United States, they have something called the gold standard or gold valuation. Like They've talked about treasuries, like putting out treasuries that are 30 years with no coupon, but it's against gold. And so, like, who's going to buy it with no interest? Well, wait a second. You're going to get gold at today's price versus the price in the future. If gold's 3,500, it's be 7,000. So I'm like, that is so smart marketing because the U.S. needs to bring buyers into their treasuries, and they're backing it up with gold. Wonderful job. I mean, sorry to say, I love what Trump is doing. If that's what he's doing, it's ingenious and it's needed to really keep fueling
Well,
the
whether it
U.S.
happens or
I think
not,
reserve currency in a sense, and I think yeah, I agree with you. Gold demand is not going to stop, and being in production, like we used to look at projects from a 7 year perspective. Norsemont, really started 2004. We exit 2011. Markets shifted on us. Now they're shifting to the positive again. Um, I definitely want to be in production in the next couple of years here. Like that gives me the freedom to make my own destiny for our shareholders to
exactly.
we're going to be a big producer. I mean, like with that type of resource, we were a mid-tier producer and we don't care anymore. Cash flow dividends, no one ever sells their stock. They just collect a drip. Or somebody big has to come and take us out at a premium that, the shareholders we get to determine that. That's in the end, they're my boss, right? I answer to them. It's even though our family's the largest shareholder, I still call all my shareholders, they're my bosses. I
There you
work for
go.
them. That's how I see it.
Well, you can either look at a 500 million to a billion takeover, or you can look at a 10 billion plus company by building
No,
it.
and you know me, I have big vision here. And I said to you, I've never exited $1 billion company. That doesn't mean I'm not, my dream sheet is very simple. $2 billion copper asset that gets bought out by BHP. If you're listening, I know you knocked on our door, and then they'll tell me to keep my crappy little $1 billion gold deposit that keeps on running, and that would be like a $3 billion win. That's where my head's at. That's where my head's truly at. But
There you
right
go.
now we got to start with reality, and we really been quiet, and we're starting to get the word out here, and we're starting to advance things. We're planning to drill this year, and we've got a pre-feasibility coming on our dumps by at the end of the year, and so we're really in run mode. I got my running shoes on, literally.
Well, that's great, Mark, and thanks a lot for spending some time with us to
Yeah, no, I
tell us
appreciate it.
the Norsemont 2.0. Some of my long-term readers, and they'll be happy to hear the Norsemont 2.0 story. And I think we should do more of these in the near term, Mark.
Yeah, and actually, one of the people I didn't talk to you about, which you'd be proud of me, is I've got Michael Thiel, who actually drilled the first drill hole on Esperanza, and then 6 years later put it into production with 2.7 billion in Chile, and also turned around Las Bronces. So he's built two big mines already in Chile and working on others, but he's on our board. So he actually sees the vision you see of Mark. Let's take this to production. I'm a businessman engineer. I know how to get this to production and generate cash flow. So we do have the right team to do what
Build
you're
it and they will
about.
come, Mark. Build it and they will come.
Exactly. Appreciate it.
All righty, I'm going to close it off, Mark. We'll do
Thank
this
you.
again soon. I love hearing the Norsemont 2.0 story. Folks, as always, do your homework, speak with your financial advisors. I'm not making buying or selling recommendations. I try to generate ideas for you. And having Mark on was a great look at the past because I've experienced what he did in the past with Norsemont 1.0. I think I started picking it when it was like 25 or 50 cents. And they ended up getting bought out for $5 or something like that. I can't, am I around the right numbers,
Correct.
Mark?
Correct.
And he even helped me get kind of famous because back then BNN used to have guys like me on all the time. And I talked about Norsemont on BNN as well. Unfortunately, they don't follow the mining companies like they used to. But I got a lot of my audience because of that. So thanks for your past work there, Mark. And I think you got an even bigger winner here in the making.
Absolutely appreciate your time and thank you for exposing us. And it's amazing to reconnect with you. And I look forward to updating you as well.
Awesome. All right, folks, have a great day and we'll talk to you soon.